Joining me today are Christian Magoon, the CEO of Amplify ETFs, and Kevin Simpson, the founder and chief investment officer at Capital Wealth Planning. First of all, gentlemen, congratulations on the nomination for the ETF.com ETF of the Year for 2022. Across almost 3,000 eligible ETFs, DIVO was one of 6 nominated for this very notable award. As a background for anybody not familiar with DIVO, the fund launched in December of 2016 and today manages almost $2.7 billion as of this recording. Clearly, DIVO is garnering both recognition and investors' attention. Christian, where is DIVO being used in investors' portfolios today?
Well, Jay, hey, thanks for having us. And yeah, for sure, DIVO is growing and seeing not only investor interest, but new recognition. You know, in the past, DIVO was primarily used as an alternative or a complement to an existing income allocation. Maybe it's dividend ETFs or some of the other covered call ETFs that are out there. But honestly, now that DIVO's had so much time in the market, going back to 2016, the performance has been quite notable from a total return perspective. In fact, outperforming the S&P since inception, outperforming it over 5 years, 3 years, and even last year. So now this kind of alpha generator that happens to produce high income and holds a high quality portfolio is being used as a core complement, replacing or maybe complementing the S&P. So we're seeing a lot more broad-based interest now than just income generation. And really the credit goes to Kevin Simpson and CWP for formulating and executing on this investment strategy.
Yeah. So Kevin, could you tell us a little bit about your actively managed approach to this fund?
Yeah, well, Jay, Christian, I think the beauty of our strategy is in its simplicity. You know, it's something that people can get their head around. They can understand it. We can go to the Amplify website each and every day and see exactly what's in there. And you know each and every one of these positions. I mean, we're talking about investing in great companies that make money and generate returns to shareholders. You know, it's not hard. It's a simple strategy, but it's a beautiful strategy in that these companies are generating amazing free cash flow. And that's the dividend growth driver behind it that I think is just so powerful. And it's not leveraged. We're not using anything weird or alternative. It's just a good old-fashioned blue chip portfolio. And I think clients really gravitate towards that. I know the financial advisor community that we serve sure does.
So Kevin, we're recording this in the first quarter of 2023. Tell us, how are you positioning the fund for this year?
Well, Jay, you know, we position the strategy the same way every year, whether markets are up, down, or sideways. We look for great companies. And the thing is, you know, there's lots and lots of companies that we love, but it's not always the price that they're trading at that we find attractive. So you have an actively managed strategy. And I was just thinking about the fact that over the past 10 years, 5 years with DIVO and even in the predecessor SMA before that, we've sold out of Apple 8 times. I mean, you know, think about that, 8 times. Most recently, it was about a month ago where we had Apple called away within DIVO. And here we are again, just this week, adding to it again at a very attractive level. When the stock was called away a month ago, it was around $157 a share. Last week, we were buying it back around $146. So I think active management plays a big part. As we position for 2023, I think the next 2 quarters are going to be challenging, range bound. The Fed's getting closer to the end of the rate hike cycle, which is wonderful. You know, markets are resilient. They're excited about that, but there's still another 50 to possibly 150 basis points still to go. So I think we want to continue to manage DIVO with a caution, bullish, excited about 2024, but making sure that we're not stretching our multiples at this point, and we're still using a little bit of a defensive mindset.
So Christian, last fall, Amplify launched the international version of DIVO. The symbol is IDVO. What do investors need to know?
Well, everything you like about DIVO goes international. So this is a high quality focused equity portfolio that looks outside the U.S. for these companies that are blue chip in nature, that are growing their earnings and growing their dividends. And then on top of that selection process performed by CWP, there's also the ability to write calls on these stocks for increased income. So when you take a look at IDVO, gives you some high potential income. We're seeing yields more attractive, I guess, than DIVO, just because of the additional volatility in international. But we're also seeing kind of these really attractive valuations historically of international stocks relative to U.S. stocks. So there's a PE discount that's occurring there, and this is a way to take advantage of that. So we think as investors are increasingly looking outside the U.S., after many years of the U.S. being the dominant alpha producer, we're now seeing international start to creep into the conversation. We think iDevo is really timely here for those who want to take a dip or and upgrade their quality when they look at their international allocation. And partnering with CWP and their expertise in this strategy, I think, is just a natural extension. And we're seeing this actually be our number one asset grower in terms of percentage assets here in 2023 at Amplify. So there's definitely advisors, investors looking at international, and iDevo's benefiting from that.
Kevin, are there any notable differences in the way your team approaches iDevo versus DIVO?
Well, I like what Christian said. It's upgrading your quality. It's a sister fund. Josh Smith and his team do an amazing job with quality cash flow. We've even recruited Tim Seymour from CNBC to help consult on this product. So we brought together a dream team of PMs and PM consultants. And to Christian's point, there's a lot of yield internationally with respect to these ADRs. We're looking at best of breed, bluest of the blue chip companies that are outside of the US. We're also actively looking at US listed options on these ADRs and really targeting a cash flow that does exceed what we've been able to achieve in DIVO, to Christian's point, because of more volatility. It's got a little bit more of a position size. We're probably going to have more positions, and we expect to have more positions with covered calls on the iDevo product. So the timing is great, the team is great, and I couldn't be more excited.
Awesome. Gentlemen, thank you so much for your time today, and congratulations again for your nomination for ETF of the Year from ETF.com.